Hi there, very good morning. Welcome to ET Now. You're watching Market Cafe with me, Kanishka Sarkar. Over the next 1 hour, I'll tell you everything that you need to keep on your radar, all the domestic and global cues and all the stocks that you need to eye out for today. But let's get started with an eye on the globe and see how the Wall Street fared overnight. The US markets were mixed overnight. The S&P 500 that hit a fresh intraday record but pulled back later in the session. The Dow Jones Industrial Average that also slipped more than 100 points or about 0.3% to close at 45,750 level. On the other hand, the tech-heavy Nasdaq Composite that failed to extend Monday's record high and that's how the markets, the major indices fared overnight in the US. The spotlight, of course, now shifts to the Federal Reserve policy decision later today. Markets are almost certain that the Fed will cut rates by 25 basis points, with futures pricing in a 96 probability. Now, the street will also be closely tracking the dot plot projections for any clues on the rate path ahead, along with any policy dissent after July's disagreements. Now, the street is expecting that the move could boost the economy as labor market data that softened as we saw, the data that came out earlier this month, even as inflation that remains above the Fed's 2% target. Now, that's about the U.S. market, so a decent day, mixed day coming in for the U.S. markets. But let's see how crude market, the commodity space is shaping up this morning. Now, oil and gold, they're both holding firm as traders are weighing geopolitical tensions and the upcoming Fed decision, of course. First up, let's talk about oil. That's steadied after a 3-day rally, with Brent above that $68 per barrel mark, whereas the WTI, that's near $65. The gains come after Ukrainian strikes on Russian refineries that cut output to post-pandemic lows, though prices remain stuck in a narrow range of, between around that $5 band amid OPEC Plus's supply concerns. Meanwhile, U.S. crude inventories, they also showed a sharp drawdown of 3.4 million barrels last week. So that's about crude. But moving on, and let's talk about the yellow metal. Now, gold is trading near its record high levels, holding above that $3,690 an ounce mark after briefly topping $3,700 yesterday. Now, the yellow metal is benefiting from Fed rate cut bets and a weaker dollar, which is hovering at its lowest since March 2022. In fact, analysts say that the central bank buying and safe haven demand could push gold towards that Goldman Sachs $5,000 an ounce forecast as well. So that's about the commodity markets. All eyes, of course, are going to be on the Federal Reserve's moves. Now, the Federal Reserve is set to cut interest rates by a quarter point. But the bigger question for the market is what comes next. Now, Treasury Secretary Scott Bessent is urging a deeper move, saying that the Fed has been behind the curve. Now, while dissent among Fed governors is possible, traders are betting on 2 more cuts before year's end. That's in October and December as well. Now, politics are also weighing heavy when it comes to the Fed rate cut as Trump is pressing for looser policy ahead of the 2025 election season. Now, to get an idea of what the market is penciling in, what the much-awaited FOMC meeting is underway and what's the street anticipating. The first rate cut of 25 basis points this year is what is being penciled in. Now, my colleague Varun Dubey is standing by to tell us what more to expect. Varun, over to you.
Well, so the street is estimating a 25 basis point rate cut in the September meeting of FOMC, and after 2.5 years, that is after June 2023, this would be the first rate cut in the US markets. And the Fed range, which is around 4.25 to 4.5, will actually start moving down. And it is not only this time, street is also expecting a rate cut going forward. If you look at the Reuters poll of 107 economists, around 105 are expecting a rate cut in the September policy, and around 60% of the economists are also expecting a rate cut in the coming policies as well. So a total of around 50 basis point of rate cut is expected in the calendar year 2025, and that is 60% of the economists are expecting a 50 basis point rate cut in calendar year 2025. And also some are expecting further rate cuts in calendar year 2025. 2026. So they are expecting a total of 75 basis point rate cut from here on till the next year. So the rate cut cycle is again to start after 2.5 years. Now there are several factors which are actually leading to the rate cuts. No doubt, if you look at the inflation numbers, they are actually expected to inch up because of the tariff war that is going on. But yes, if you look at the other economic data points of the US market, especially the unemployment data, that is something which is actually worrisome. And if you also remember, during the Jackson Hole Symposium, the Fed chairman was actually sounding a little bit dovish, and also the street is expecting the overall unemployment data to inch up going forward in the US markets. And this is one of the important data points because of which street is expecting a 25 basis rate cut in the September policy, and also going ahead you might see a series of rate cuts in the US market. So after finally 2.5 years, that is Jan 2023, the rate cut cycle in the US market is about to start with a 25 basis rate cut in the September policy.
All right, so let's see how that pans out and what kind of rate cut we see coming later today after that FOMC meeting. But moving on, a U.S. appeals court has rejected Trump's bid to remove Federal Reserve Governor Lisa Cook. That's in a case as a major test of Fed independence. Now, the ruling keeps Cook in place for this week's policy meeting where rate cuts are expected. The White House says that it will appeal to the Supreme Court, arguing presidents have broad discretion to fire Fed governors. So that's about Lisa Cook. But moving on to some latest updates as far as U.S. and China ties are concerned. The U.S. Treasury Secretary Scott Bessent says that a U.S.-China trade deal is likely before reciprocal tariffs kick in this November. Now, in an interview, Bessent noted that recent talks have grown more productive with both sides signaling progress. Tariffs of up to 145% on Chinese goods remain suspended until November 10th. Now, the U.S. trade deficit with China has narrowed sharply in 2025, and officials expect further declines going forward. Bessent, in fact, says that the aim is to balance this deficit. Moving on, now let's also take a look at Trump's comments. Now, Trump says that a deal has been reached to keep TikTok running in the U.S., requiring its American assets to shift from China's ByteDance to U.S. ownership. The deadline to finalize the transfer has been extended to December 16. Let's listen into his comments.
We have a deal on TikTok. I've reached a deal with China. I'm going to speak to President Xi on Friday to confirm everything up. We made a very good trade deal, and I hope good for both countries, but a very different deal than they've made in the past.
What companies are going to buy
We'll be announcing that. We have a group of very big companies that want to buy it. And, the kids wanted it so badly. I had parents calling me up. They don't want it for themselves. They want it for their kids.
All right, so those are the latest comments coming from Trump. But moving on, let's get tracking some more global stories. The U.S. Treasury Secretary Bessent also says that Trump's proposal to scrap quarterly earnings reports in favor of semi-annual disclosures would be a win for investors. Trump argues that the shift would free CEOs from short-term pressures, cut compliance costs, and also make U.S. markets more competitive with foreign exchanges. Next up, TikTok is moving closer to a framework deal that would bring in new and existing ByteDance investors while keeping Oracle as its cloud partner. While details remain under the wraps, reports suggest that investment will be modest and not aimed at taking the company public soon. Moving on, then U.S. retail sales surprised with a 0.6% jump in August, triple from the forecasted 0.2% gain and matching last month's sales. Now, this data highlights that resilient consumer spending despite economic headwinds there. Now, strong sales could influence Fed policy towards tighter rates as well. Moving on then, Donald Trump has landed in Britain for his second state visit, the first U.S. president ever to receive that honor. His arrival coincides with a landmark $42 billion U.S.-UK tech pact focused on AI, quantum and clean energy as well. Now, while speaking to reporters after landing in the region, he said that U.S. and UK share a deep friendship and a few trade detours won't need to be, those are the things that need to be sorted out. And let's go across and listen into his comments coming from the UK.
They're also on trade. They want to see if they can refine the trade deal a little bit. We made a deal, and it's a great deal. And I'm into helping them. Our country is doing very well. We've never done this well. We're having trillions of dollars coming because of the tariffs. They'd like to see if they could get a little bit better deal. So we'll talk to them.
All right, so those are the latest comments coming from Trump when he's landed in the UK. But moving on, now tech giants are pouring more than $40 billion into the UK's artificial intelligence, with Microsoft alone committing $30 billion through 2028. Nvidia has pledged $15 billion, including its largest ever GPU deployment in Europe, while Google that has announced nearly $7 billion for a new data center near London. OpenAI, on the other hand, will launch a major Stargate UK project, and Salesforce, meanwhile, is boosting commitment to $6 billion. Next up, let's shift focus to Japan. Now, Japan's exports have slipped 0.1% in August, marking a fourth straight monthly decline. But the drop was far milder than economists were expecting. Now, imports, they also contracted, falling 5.2% year-on-year, though more than forecast. Exports, on the other hand, to the US, that plunged nearly 14%, hit by weaker demand despite a recent tariff cut deal. Shifting focus now, Russia may be forced to cut oil output after a wave of Ukrainian drone attacks damaged ports and refineries, according to reports. Now, pipeline monopoly Transnet, that has restricted storage and warned producers that it may accept less crude. Moscow has denied the reports, calling them a Western information war, but Ukraine strikes have already knocked out nearly a fifth of Russia's refining capacity. Next up, in his second innings as an entrepreneur, former Australian captain Steve Waugh tells Ankita Saxena of ET Now what he thinks will make the Indian consumers stick and what's in his entrepreneurial playbook. Let's listen in.
You have had a very intimate relationship with India, with a very long-standing relationship. First, on the field as a fierce opponent. Now you're forging a rather intimate relationship because you have to work with the consumers now through your entrepreneurial offering. And while you have faced the Indian cricket team on the field, how prepared are you to face the challenging Indian consumer of it?
Yeah, good question. Hopefully okay, because I've been coming to India now for 40 years. First tour was back in 1986, so obviously a long cricketing career. Then I got involved in philanthropy, had a long association with India, just finished a photographic book all through India. And now the business venture, Australia Essence. So it's really showcasing Australian products to the Indian market and hopefully making the entry into India a lot easier than it otherwise would be, because it's a little bit complicated to bring your product to India and make it work. So it's either with our team in Australia Essence.
Yeah.
We hope to make that a smooth transition for people wanting to showcase their products into India. Australia's got some amazing produce, and that is our aim.
In fact, Steve, you have had your ear to the ground because you have been doing a lot of charity work in India. So you, in a way, understand the pulse on India, if you will.
Yeah.
What do you think will work for the Indian consumers through your offering?
I think products that are genuine and authentic, that you don't have to sell too much. I mean, they speak for themselves. They're the products I'm interested in. Every product we introduced today in the Steve Waugh hamper is something I've used and believed in. And I know the owners, I know their stories, they're real people. And I think Indians will see that connection straight away. They've got great backstories. They're in it to make a difference. If they do that, they're not making money, but it's about producing a good product. And that's what I'm interested in, because when I played cricket for Australia, it was all about having complementary players in the team with different personalities, different character traits. At the end of the day, they're all playing for the team, and that's what we want to bring products to India that are really worthwhile and are quality.
As a cricketer, I'm sure you have a certain playbook or the rules that you play by. What would be in your entrepreneurial or startup playbook?
Think big, don't listen to someone if they say you can't do it.
Yeah.
I think surround yourself with people who've got positive attitudes, who believe in you and who back you.
All right, on that note, we'll take a very short break. Be right back with more news and updates coming up on the other side. declined as investors are awaiting that key monetary policy decision from the US Federal Reserve's two-day meeting where it is expected to cut rates. All eyes are going to be on that. Let's take stock of how different indices across the region have opened up. Japan's Nikkei is up nearly 0.3% at that 45,000 odd level. On the other hand, we have China's Shanghai index, which is also trading in the red. In fact, it's down about 0.1%. It's at that 863 odd level. It's moved to the positive territory now, but just about flat. On the other hand, Hong Kong's Hang Seng Index, that's also trading in the green. It's up nearly 1% as we speak, above that 26,600 level. On the other hand, South Korea's Kospi Index, that's the one that's trading in the red. It's down nearly 1% at that 3,415 odd level. On the other hand, Australia's ASX 200 index, that's also trading in the red as we speak, down about 0.5% at that 8,820 odd level. So that's how the Asia Pacific markets have opened up. Largely mixed moves coming in. Now let's take stock of what to expect for the Nifty back home. Now we did manage to end above that 25,200 level yesterday, near the day's high, and as of now we can see a positive start that is likely for the Indian markets, up nearly 0.2%. So that's how the Indian market is expected to end. Now, let's just take stock of how it ended yesterday. The Nifty did close at its highest level in over 2 months yesterday. It was the last hour that saw sharp spikes. Nifty did test that 25,250 level also. Nifty Bank, meanwhile, that ended above the 55,100 mark, advancing for the 10th session in a row. Nifty Auto, that supported the positive momentum in the market, becoming the top sectoral gainer. In fact, Snehi is joining us to take us through all the market action roundup from yesterday.
Well, yes, absolutely. Range-bound trade of day is what we've seen for our market. What started as incrementally positive ended incrementally negative for our market. We've touched up around that 25,065 thereabouts, that mark thereabouts. On the Nifty, you have similar cuts coming in on sensex, so 0.1% cut coming in on the sensex as well. If you take a look at the broader end of the market, the real outperformance lies there because Nifty mid-cap did very well. It was actually the small-cap space that showed all the exuberance of 0.8% and outperforming the entire breadth of the market. Nifty Bank too was absolutely flat, but with a hint of a positive bias, so did pretty okay for itself. It was names like Geo Financial, Eternal, Bajaj Finance, Ultratech, Bajaj Auto that were the top Nifty gainers. Very nominal gains coming in. On the flip side, from the Nifty losers that maintained some pressure on the index, you had Asian Paints, Cipla, M&M, Shriram Finance, Dr. Reddy's, Infosys and Aisha that were lower by about 1.5% and continue to weigh on the index overall. Sectorally, it was the day of the real estate stocks. Anant Raj was up about 10% at close, led by the news that the government is mulling a tax break on data centers for at least 20 years. So positive news for Anant Raj. Other than that, some peers like DLF, Prestige, Sobha, Oberoi Realty were all doing well from the real estate pack. Following that, you had positive moves coming in from PSU banks, energy, banks, financial services, metals and FMCG on the flat line. On the flip side, slight pressure on auto, IT and pharma. So names like Persistent, Infosys, TCS, Coforge in the IT sector. And from the pharma space, you had names like Natco Pharma, Torrent Pharma, Zydus, Ipca Labs, Gland and Laurus Labs that were under some pressure. All in all, other than that, railway stocks were doing very well in trade. You had the likes of RVNL, Ircon, IRCTC, all of them did very well. Railtel also, all of them have done very well in trade. On the flip side, some pressure on names like Garden Reach, Acme Solar, Devyani, Madison, Astra DM, Biocon, Bandhan Bank.
All right, so that's about how the Indian markets fared yesterday. Lots of stock-specific action. But moving on, let's see what all are the stocks that are going to be in focus today that are likely to buzz in today's trading session. And Ashesha is now joining us to just that list. Ashesha, over to you.
Well, yes, let's start with the real estate sector and Mahindra Lifespace is first then, and this is on the back of some new projects that the company has won. In fact, the company informed the exchanges that they've been chosen as the preferred developer for redevelopment in 2 societies in Chembur, and the total area and the total revenue potential of this particular project
stands at about 1700 crores. So on the back of this positive development that has come through, keep an eye out on Mahindra Lifespaces. Meanwhile, BEL, this one is also on the back of an order. The company said that they've won orders worth over 700 crores. So positive news flow coming in over here as well. Dr. Reddy's, where they've launched novel molecule tegoprazan in India. So new launch that has come through from this pharma company. Blue Dart, meanwhile, negative news over here. The company says that they've received GST notice, totaling to about 366 odd crores. And lastly, mining major and metals major Vedanta will also be in focus today. And this is because NCLT hearing to consider demerger is scheduled to happen today. Remember, on the 20th of August, NCLT hearing was scheduled, but then it was deferred to today. NSE has already given its no objection certificate, but some timeline was given to other government bodies to prove their stance with respect to objections that they had raised earlier. So an important day coming in for Vedanta with respect to its fate for demerger, which has been in the pipeline for the last several years. And now we have some comment that has come in from the CEO, where he has said that merger is likely to be completed in FY26 itself. So important clarification that has come in from the company, and on the back of this NCLT hearing today, keep an eye out on Vedanta as well.
All right, so a whole host of stocks in focus there. Thanks, Ashisha, for taking us through that list. But Sharad, let's also come to you. Which are the stocks that you are tracking this morning?
Adverse impact expected for PV Fintech as sources say to ET Now that private and general health insurance might take commissions cut of between 2 to 3 odd% for the aggregators, especially to offset the input tax credit loss. Also, Dreamfolk Services, they are discontinuing their domestic airport lounge services with immediate effect. Other domestic services would be there and global lounge services would also be there. But as per ET Now calculations, around 87% of the revenue comes from just the domestic facing clients, out of which only 6% is in the non-lounge services. The likely impact would be 80% of the revenue operations for Dreamfolk Services. Angel One, positive news flow coming in as they have signed a JV to enter the life insurance market with LiveWell. Angel One will have roughly 26% stake, investing 104 odd crore rupees. Amber Enterprises, their 1200 crore QIP has been launched with the indicative issue price of a 6% discount. And also Gujarat Fluorochem, a blood deal is likely to be there as promoter is likely to sell 13 lakh shares worth almost 455 crore rupees at a discount of 5%.
All right, so lots of stocks to track in today's trading session. Thanks, Sharad, for taking us through that list. But moving on, let's take stock of some of the cues that we need to watch out for. First up, let's take a look at some global cues. Of course, from the US, it's the FOMC rate decision that we are going to eye out. Next up, there's in the UK, the CPI data and retail price index. This is some of the data that's going to be out, so something key to watch over there as well. In the Eurozone CPI data yet again, and the ECB wages tracker, that's something that we'll be eyeing out for. Apart from that, we have a lot of action in China as well. Now, trade data is something that will be out today, so something key to watch there. Apart from that, global earnings. In terms of global earnings, we have General Mills reporting their earnings later today, so something to keep an eye out for. Now, in terms of corporate action back home, let's take a look at some of the stocks that are going to trade ex-dividend today. Garver High-Tech, Films, now KRBL, Rights, Shilpa Medicare, all of these stocks are going to trade ex-dividend later today. Apart from that, it's also the last day to buy shares to be eligible for a dividend when it comes to GMDC, Hindustan Copper, Jamna Auto, Poly, Medicure, Shakti Pumps and SJVN. Other than that, there's also Venus Pipes and so that's some of the stocks that you need to buy if you need. It's the last day to buy them if you to be eligible for a dividend. Apart from that, there will be some AGMs that are also in focus today. Include the likes of PNB Gills, Subros, Sandur Manganese, Astra Microwave, Aether Energy. So these are some of the stocks that we'll be watching out for. Apart from that, lots of IPOs also, IPO tracker that we need to watch. It's the likes of VMS TMT, which is opening for subscription today. So that's about the IPOs there. Apart from that, some of the cues that we need to watch for on the D Street, it's going to be the D Street debut for Srinagar House of Mangalsutra. Apart from that, Urban Company, Dev Accelerators, these are all going to have their debut on D Street today. Apart from that, globally, some key events that we are watching out for. Now, Donald Trump, he's going to continue his visit to the UK. So let's see what are the comments that come out of that visit. Apart from that, ECB President Christine Lagarde, she's expected to speak in Frankfurt. The deadline for TikTok's ban enforcement, that is also expected to end today. So let's see what comes out of that. But moving on to some other updates. Now, the thawing relations between India and the US, they eased a bit more when President Donald Trump called on Prime Minister Narendra Modi to wish him on his 75th birthday. Both the leaders took the call details to social media, with Trump calling it a wonderful phone call and also thanked Prime Minister Modi for his support for ending the Russia-Ukraine war. Now, this was the first call between the two leaders since June 17th. The relationship between India and US that turned sordid after Trump imposed an additional 25% tariff on India with a total levy of 50% for its continued purchase of Russian oil. Now, the exchange comes as India and the US resumed trade negotiations in New Delhi yesterday. Alright, so those are some of the latest updates that we are tracking. But on that note, we'll take a very short break. More coming up on the other side. From after these talks, my colleague Sumita Karir is now joining us with all the latest details there. Sumita, over to you.
That's right. In fact, a trade team led by United States Chief Negotiator Brendan Lynch arrived in India and they held day-long discussions yesterday. In fact, these discussions from the Indian side were carried on by India's Chief Negotiator, India's Special Secretary in the Ministry of Commerce, Mr. Rajesh Agarwal, along with his team. And essentially, these discussions, according to what sources are suggesting, these discussions went on for over 6 hours. In fact, in a statement that's been released by the Ministry of Commerce and Industry, these day-long talks revolved around India-US trade ties and India-US bilateral trade agreement. Remember, these were not official sixth round of talks. These were a precursor to these talks. And of course, a sixth round of talks will be announced after this visit. In fact, any time now is what we're given to understand that the sixth round of talks and essentially where will they take place will be announced and should be decided upon. In fact, let's now take a look at what the Government of India, the Commerce Ministry, has posted as far as these talks are concerned. It posted the discussions were positive and forward-looking. This is a stance that the U.S. Embassy right here in New Delhi has also maintained, that these set of talks were positive. The Indian government also states that discussions covered various aspects of the trade deal, and it was decided to intensify efforts to achieve an early conclusion of a mutually beneficial bilateral trade agreement. Now, this line is particularly important given the fact that both sides have been rather keen to finish and to conclude the first tranche of the bilateral trade agreement, as was discussed by both the leaders, President Trump and Prime Minister Modi, when they met earlier this year at the White House. Remember, India and the United States have been engaged over these past few months on various levels, whether it's at the trade level, diplomatic levels, or on ministerial levels. And of course, these talks, which happened yesterday, these were essentially to find convergence on a whole host of issues, find out sensitivities of both the sides, and perhaps set the ground for the next level of talks, the sixth round of talks, whenever it is that they happen. So while this is important to note that these talks happen, it's also important to note what GTRI industry body is essentially stating. GTRI says that negotiations would remain in the slow lane unless Washington signals genuine flexibility, and without the rollback of oil-related duty, oil-linked duty, no breakthrough is politically or economically viable, and that India must hold firm as far as its agri and dairy segments are concerned, because these are politically and economically sensitive sectors. So remains to be seen what kind of convergences of both the sides really agreed upon for the sixth round of talks to happen.
Thanks, Sumita, for taking us through all the latest updates there. But moving on, now, although PSU insurers may have decided to take the hit on their balance sheets to pass on the full GST benefit, private general and health insurers have a different strategy to offset the ITC loss. ET Now learns that insurers may trim commission for agents, brokers and web aggregators. My colleague Anurag Shah is now joining us with more details here.
So there is a complete certainty for insurance policy holders that they will get benefit of 18% GST reduction on their health insurance policies, because insurance companies have assured government and DFS officials that policy holders will get 18% benefit. So, 4 PSU general insurance companies, New India Assurance, United India, National and Oriental Insurance has confirmed that they will give the complete 18% benefit, and agent and intermediaries commission will also not be reduced, and the impact, the ITC impact will be borne by companies on their balance sheet. But on the other side, private insurance companies, private general insurance companies, private health insurance companies, standalone health insurance companies are likely to pass on the ITC impact to intermediaries. Intermediaries like their distributors, brokers, agents are likely to borne the ITC impact. So this impact on intermediaries is likely to be of 3 to 4%, and on a health business, the commission is of 15%. So commission will reduce for intermediaries, but insurance experts are also saying that after the reduction of GST, health insurance sales will go up. So on net basis, there will be not much of impact on intermediaries like brokers, distributors and agents also. But insurance companies will not take the complete hit. They will reduce the commission and pass on the complete benefit to insurance policy holders.
All right, thank you, Anurag, for getting us all those details. But on that note, we'll take a very short breather here. We'll be right back with more news and updates on the other side.
Analysis, roughly 87% of the revenue comes from just domestic operations as per the annual report, and only 6% of revenue comes from non-lounge services. As per calculations, 80% of the revenue is likely to be impacted. Now, why the pressure is coming on the company as well? There are certain programs with ICICI Bank and Axis Bank were closed with effect from July 1st, and even the institutions have been selling their stake massively over the last 2 to 3 odd years. Now, overall, the entire business model for Dream Folks is being questioned and has lost their moat, as the lounge business is now dependent on the relationship of bankers. Recently, banks have actually started rolling back freebies like lounge access, and large airport operators may provide direct access to lounges. That is why middlemen are getting eliminated, and the company itself is forced to change the business model. Now, financial trends. Revenue numbers looking strong, but the PAT numbers not looking good. Very small margin is there in this business model. And the shareholding pattern, if you look at it, only Motilal Oswal Mutual Fund, they have remaining 3.1% stake in the company. They have also been reducing the exposure. It was almost 7% in December last year. And FIIs also is virtually no presence in the company now. Last, of course, 5 to 6 months ago, these numbers were more than 2.5% of the total equity size. How returns have been coming in for the stock? It's been very dismal. From lifetime highs down 83%. This year it's down 73%. And of course, on a 1-year basis also, the number is more than 50-odd%.
Thank you so much, Sharath, for taking us through all those details. Dream Folks is likely to be in focus today on the back of that change in business model. But with that, we're completely timed out on this edition of Market Cafe. I'll take your leave, but don't go anywhere, as the market will take all the action forward.